I held off investing into ISAs for years and years because I just thought they were a complete and utter waste of time. But in reality, I just didn't understand them or the process of even setting up one. So in this video, I'm going to explain UK ISAs to you, covering the 4 different types of ISAs that you may have heard about. How do you set them up? What are the rules? What are the benefits? And what I will do, I will stick timestamps down below. Also, if you hang around to the end, I will put a bonus tip into the video that might make you up to £250. I hear you say, what is an ISA? An ISA basically is a tax wrapper which allows you to put your money into an account which will protect you from having to pay income tax, dividend tax or capital gains tax on any of the gains that you actually make within that wrapper of funding. Tax year runs between 6th of April and 5th of April the next year, and currently you are allowed to invest up to £20,000 into an ISA. There are 4 different types of ISA. There is a cash ISA, a stocks and shares ISA, a lifetime ISA and an innovative finance ISA. And I'll chuck in an extra one. There is also the junior ISA where parents can actually invest money on behalf of their children. But at the age of 18, the children then get their hands on that and can spend that money as they wish. Another interesting thing about ISAs is, as it says there, you can put money into one of each kind of ISA each tax year. So basically within the 4 different types of ISAs you can decide to split up that allowance of £20,000. A couple of other things to open up an ISA. For a cash ISA, it is 16 years old and above, and then the other type of ISA is the stocks and shares, and the innovative finance ISA, you need to be over 18. There is that slight difference for the lifetime ISA, which we'll come on to when we talk about it. A cash ISA, bit of an anomaly because in reality it's just a savings account which gives you a fixed rate of interest, normally above what a bank would provide you, and you don't pay any income tax on any of the interest that you make in the account. You can invest up to £20,000 per year, and you will normally get, at this point in time we can just see that the best 1 year fixed is 3.61% being provided by UBL. Obviously this is still below the rate of inflation, so you are still losing money on your cash that you hold within this account, but it is better than leaving in just a basic savings account in a bank. So the second type of ISA that we have is a stocks and shares ISA. So this, as it says, name on the tin, you're investing into the stock market, and you can do this through a number of different ways, but depending on what investing platform you're actually using will depend in what you can actually invest in. Sometimes it will be individual shares, sometimes exchange traded funds or bonds, or actually a mix of some of those. What you can do is invest up to £20,000 a year in a stocks and shares ISA, and once again any dividends or any capital gains made within the tax wrapper is free from any tax. Really important to look and see what the costs are that the platform is going to charge you to actually use it. Some will be more expensive, so your Hargreaves Lansdownes will be a lot more expensive than your Trading 212 accounts. But if you want to learn some more about different trading accounts, you can have a look in the description below at some of the links I've got down there, or just have a look at the card on the screen. So on American stocks, you would end up having to pay a dividend tax, and normally it would be 30%, but on signing up for the platform you will have a form to fill out that will exempt you as being an overseas or non-US resident, which will allow you to get that reduced down to 15%. If you're buying stocks in the UK, you're going to end up having to pay stamp duty basically on that, which is 0.5%. So a lifetime ISA, or a LISA, which people tend to call it. So this is basically an ISA that is there to help you buy your first home or save for money later on in life. And you must be between 18 and 40 to be able to open one. And you can only invest into a LISA until you are 50 years old. How does it all work? Basically, you're allowed to put £4,000 in per financial year, and the government will top that up by 25%. So, i.e., you get a free £1,000 from the taxman. So, in total, each year you would be able to wrap up a total of £5,000 within the LISA. What can you actually use it for? It's basically there to buy your first home, and there is the requirement that that house must be under £450,000. You can also withdraw at the age of 60, or if you are unfortunate enough to be terminally ill and have less than 12 months to live, you can then withdraw at that stage. If you do it at any other time, you lose out on that 25% bonus. If you've been getting value out of this content and some of the other stuff, I would love it if you could hit the like button and also think about subscribing. So I did mention that there was also the junior ISA, and how does this work? So basically the parents set up the account for their children, and it can be used the similar way of a cash or a stocks and shares ISA. I actually am going to set one up for my kids and start teaching them about the benefits of actual regular investing into the stock market. At the moment, the allowance for the junior ISA is £9,000 per year. I've got a quick question for you guys. Are any of you investing into ISAs, and what kind of ISAs are you investing into, and how long have you been doing it? This ISA I had never actually heard of, and quite a lot of people probably haven't, the Innovative Finance ISA. So basically what is this? This is peer-to-peer lending. So it is basically you would be lending your collateral to a platform or people through a type of loan, and basically when they pay you back, they will have paid a higher interest rate than they would normally have been able to secure in a bank. All in all, what can we potentially do if you are really, really lucky and have lots of disposable income that you can invest? What you could do is you could have a ISA for yourself with 20,000, your spouse could have 20,000, and then any children that you have. So in my circumstance, potentially I could have 58,000 being put in to a tax wrapper over a financial year. But unfortunately I don't have anywhere near that disposable income. Tends to be when you've got kids, they spend quite a bit of your money. I did promise a bonus tip, and my bonus tip is, if over the whole COVID period you've had to work from home for even one day a year, go on to gov.uk and have a quick look at what tax relief you can claim. I have actually gone on and done this very recently, and I got over £250 paid within the week because I hadn't actually claimed my working from home allowances, and all you needed was 1 day per year. I'm aware that there's been an awful lot of information in this very short video, but hopefully it has given you a quick insight into the whole ISA world, and hopefully you do think of signing up to some of them. What I will have done is I've put links to some of the accounts that I use in the description below, and also I have got a couple of video suggestions for you that will help you figure out how to actually set up your own account. I look forward to seeing you in the next videos.